can see your screen, but we can't hear your voice. So if you're talking right now, or you just setting it up so the intro plays, I think that's what you do.
You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 9th day of January, 2020. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. If you can't see the screen I have up, we can fix that. Go to our homepage at cfrn.net. On the right-hand side, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office, away from the desktop, not to worry. Point any internet-connected browser to cfrn.net/live, and there you'll find a live, real-time simulcast of the show, brought to you by the good folks at YouTube. Thanks, YouTube. Also brought to you now on Facebook and Twitter. All right, let's take a look at the chart. S&P 500, Emini Futures. Let's start out with the 30-minute chart today. Then we'll take a peek at the daily. Looks like we found some resistance up here. 32.75 area. Looks like the swing high on the session so far. 32.75 and a quarter. Now, we got a weekly trading zone at 32.59 right here. And then the highest weekly trading zone for this week is up at 33.56/57. This Concierge Trade Alert was issued Wednesday morning at 1:15 a.m. Eastern. Consider being long, 32.26. Now we had an alert this morning. Now let me bring that one up. Wednesday, the alerts came out at 1:15 a.m. Eastern. That's the one you're looking at right here. And then today, Thursday, they came out at 7:15 a.m. Eastern. Typically, the concierge alerts are issued shortly after the Globex Open, each and every evening, Sunday through Thursday. The Iran issue played into the delay on Wednesday, and there were other extenuating circumstances that played into them being a little late today. Now, today's alert on the S&P, which again came out 7:15 a.m. Eastern, that was to consider being long, 32.76. And let's put a line at 32.76. I think I got a chart hiccup here. And I'll let it sort itself out. There we go. All right, 32.76. There it is. It showed up. My charts are lagging just a little bit. I may relaunch the platform here in a moment, so we'll keep the show going, but I may relaunch DT Pro.
Yeah, I was having trouble with it at one point this morning too, and yesterday I had a big problem with it.
Did you?
I did. Yeah, I had to restart DT Pro yesterday, and then my indicators didn't work, and I had I had big problems with it yesterday. Wasted about 20 minutes during the morning session, but it was working this morning. It was working, but somehow overnight my GCL G0 chart changed to GCL H0, and then I couldn't go back.
Really?
I couldn't. I couldn't roll it back, so I had to restart it again. But this morning it went back pretty quick, and everything came right back on. So yeah, I think they're having issues.
Well, they're having issues. I'm probably due for a reboot, but anyway, at least we managed to get the line up there. Okay, guys, so the alert this morning, which again came out at 7:15 a.m. Eastern, was to be long 32.76. Always think of an alert price the same way you think of a weekly trading zone. When price gets there, just as it did here, it's an important price, important area, so the market has to make a decision. Are there enough buyers in the order flow to support a continued move higher or not? As you can see, price marched right up to the number, and this happened during the current 30-minute candle, 12 noon Eastern to 12:30. We've got, it looks like about 5 minutes left in the life of this candle. And the swing high tell you what I want to do, guys. I got a little bit of news I'll share with you while this platform reboots, so stand by. We're going to see if we can, because it'll be extremely aggravating for both you and I if we have to struggle through this. All right, so the swing high, 32.75 1/4. Yep. Okay. The alert's at 32.76. So as price marched its way up to the trigger, we spent, these are 30-minute candles, so we spent 1, 2, 3, 4. We're on the fourth 30-minute candle, so almost 2 hours. Again, that's the market, assessing order flow. Buyers, sellers. Who's got the ball? Okay, looks like the sellers have got the ball for the moment. Now, I sent out an alert this morning before the open, or no, shortly after the open, and here's what it said. I'm going to share it with you if my computer will cooperate. Okay, come on. Interesting open. During the first 10 minutes of trading, we had 106,000 contracts, which is pretty good volume. But price had barely budged at that point. So I said, be prepared for a potential swift move to the downside. Well, it wasn't. Well, it may still be swift, and this may be the down move that I was looking for. We'll keep an eye on it. We're down now to swing lows, 32.68.75. Now the flip side of that alert, if I can bring that back up. Let me go to the alerts from this morning. Probably need a full reboot, but that's okay. We're going to get through this. All right. In fact, now's a good time if you want to grab a copy of the Concierge Trade Alerts that came out this morning. If you want to grab a screenshot. Here it is. Okay, there's the 32.76. Or consider being short 32.50. Whichever presents itself first. So the market wasn't too keen about attempting a run through 32.76. So 32.50 on the downside. Now that's a lot of room there. We've got 26 points between those two triggers. Anything that happens between these two lines in the sand really is just the market still trying to make up its mind. Are there enough buyers present in the order flow to support a continued move to the next important price, important area overhead? Or are we in for perhaps a different end of the week than the way we started? Now, this was a nice move, 32.26 up to 76, 50-point move. S&P pays $50 per point, so $2,500 per contract traded. Let's go ahead and look at the daily real quick. Okay, here's the daily. Now, this was a big picture alert that we sent out. I think it was on this day here that we put it out. Could have been this day. So we triggered. We made it to the first target. Important prices, important areas are almost always tested. So we got back above the trigger. We hit the target. Back above the trigger. And we almost made it to this 50% Fibonacci retracement, which we're also using as a target. And that's important because on this move up, right here, this was at one point the all-time historic high. Price couldn't move through that area, so we got a retracement, and then a leg and a retracement, and then a leg and a retracement, a leg and a retracement, and here we sit. Now, if we use our Fibonacci extension tool, not the retracement tool, we go from that swing low to that all-time high. It was an all-time high at that point in time. So we're going to connect that. So from the low to the high to the retracement low, 32.75.38. Okay. Now, it just so happens that is the same area. Okay. Whenever you have two things, two different methodologies, two different strategies, whatever it may be, when you have two things, and we talk about this a lot here on the show, we talk about Logic 247 and Concierge, both pointing at the same important price, important area, that always deserves a second look, because there's a high probability that there's going to be a high probability trade setup, high probability, low risk. So we've got it on the 30, and based on 14th century math, same area, 3275.38. Now, because this is a daily chart, and because if I adjust any of this, you see how that moves? Okay, so when you're dealing with these bigger time frames, you've got to remember that we're really talking about an area. Okay, see the swing high on this was 32.75 1/4, right? The number here, see, I just fidgeted with that a little bit and knocked that number down to 32.69. So when you're getting a big picture look at the market, it gives you an idea of which side of the street you want to be on, the long side, the short side. And then when we drill down to the smaller time frame, like the 30-minute, okay, now you can get a little more precise with your entry. And of course, you can take it down to a 5-minute. In the live training room every day, you'll see Michael teaching the core methodology using a range chart, 4-tick range, which is different than a 4-tick chart. Okay, a 4-tick chart would just be too fast to even consider trading. A range chart, you can set it at 4 ticks, 6 ticks, 8 ticks or more, whatever floats your boat. The idea is it gives you some real nice symmetry, because every candle is the exact same size. Every one of those candles is exactly 4 ticks tall. See the symmetry there? Okay. Now, what's price trying to do? Where's price trying to go? Price is always trying to find a weekly trading zone. From the moment the markets open Sunday night, 6 p.m. Eastern, till Friday afternoon, 5 p.m. Eastern, price is on the move, even when it's consolidating, even when it's moving sideways. It's either going to attempt the zone overhead or the zone below. Once you're able to discern where the market is trying to go, all you have to do is look for a high probability, low risk entry that allows you to climb on board. So we'll take this back to the 30-minute. And 3259/60. Okay, that's current weekly zone. And then the zone overhead, the highest weekly zone, is 33. That's last week's. It's way up there. Hang on, I'll bring it in focus. 33.56/57. Now that, considering that we're halfway through a Thursday, I don't think we'll see the highest weekly zone this week. And the highest weekly zone or the lowest weekly zone, it's not a prediction that the market is going to go there. What the zones do, they create a playing field, if you will. Imagine you're at a football game and you're sitting at the 50-yard line. If you look to the left, you got the 40, the 30, down to the end zone. Same thing when you look to the right. So let's move this up to 57. Today is Thursday, so Dr. Tom, as far as I know, he'll be joining us. I think it's next Thursday that he's going to be out. He'll be joining us at the top of the hour. I just spoke to John. He's going to join us here.
Yep, he's in. I can open up his mic.
Oh, yeah.
And,
yeah, if he's here, go ahead and open him up.
Yeah, and Frederick just made a comment. NBC News just broke in with news that Iran mistakenly shot down the passenger plane.
Oh, gosh, yeah. I had an article here on CNBC that just scrolled across my screen, and I got sidetracked, and I was going to... Here we go. Iran missiles appear to have shot down Ukraine-bound Boeing airliner. Did you say you opened up John's mic?
I did.
Okay. John, are you there? He's probably got us on hold. Okay, let me share this. All right, guys. So you know where this zone is, 56, 57. Again, I don't think we're going to have to worry about that this week, but it could be important depending upon whatever kind of day we have tomorrow. Jot that number down, because if it's not important, Sunday night, Monday, Tuesday of next week, it very well could be. So now if I can get my chart to, let me just take this opportunity right now. So I'm going to jingle John's phone, have him pop in. I gotta reset these charts. Okay, come on down. Okay, we're just gonna close that for a minute. We'll go here. Spy satellite imagery suggests that Ukraine-bound trying to do two things at one time. Okay, so I better save this workspace. I don't think this is a DT problem that I'm having. Yours may have been. I think mine is a.
My original problem, I think, was memory, because I had like 5 things of Windows open. I had 2 things of DT open. I had 2 things of Ninja Trader open. I had multi-charts open.
Oh boy, that is a lot.
And I had like 6 Excel sheets open. So I had a lot of stuff going on, and so I closed all that. And then I restarted, sorry, I didn't restart Ninja. I restarted DT Pro, and everything came back to life.
Well, I think one of my problems is, and I've got to figure out how to fix this, I have 2 high-end graphics cards in this machine, but I think I'm only using the onboard RAM on one of the graphics cards. So I think, instead of the workload being spread out between the 2 cards, I think one card is doing all the heavy lifting. So I got to figure out how to fix that. All right, I'm going to try this one more time. Workspaces. Save as.
Hello.
Hey, John. Welcome to the show.
Hi, thanks. I actually tried to get on a bit earlier. I was just going to call you, but look, I think the market is a sell today.
We were just talking about that. I sent out a message this morning, early on, to be prepared for potential swift move to the downside. So
Yeah,
it could be
it's
underway
started
now.
and it's gathering momentum. And look, we've already gone negative on the semiconductors and on the Russell, and very close on the mid cap. This is a very bad sign already, and now everything else is coming, going to a sell. I just called a high on Apple. Actually, tried to get a guy out right up at 310, who was long from recently, and I called a high on Tesla this morning as well. Tesla started leading the way down, and now Roku, Microsoft, Facebook, they're all starting to come apart. About a half an hour ago, or maybe a little bit more, Trump came on, and right before noon, about half an hour ago, they came up with a report from the Pentagon saying that plane was shot down.
Yeah, we were just starting to talk about that. So what information do you have? What did they say in the report?
Look, it's the Pentagon. Anybody who's in the aviation business, I think, realizes that this was a unfortunate shoot down, whether it was by mistake or whatever, however it happened. Obviously it's a very bad development, and it's certainly enough to cause people to sell off or take some profits. Also, when the market's going up in a way that it's been going up in the last few days, where it just doesn't make any sense, you've got to be very careful of moves like this. It's sort of a suck-in move where it gets the last people who can't stand the market going up anymore. We've gotten to 9,000 where we were 9,000, half an hour ago. Now we're at 8,961 on the NASDAQ. So we've lost 40 points pretty rapidly. We're 29,000 on the Dow. I was thinking about that this morning. If you remember, this is a lot bigger. Getting to 30,000 is kind of, it's in a way, it's 3 times bigger than going from 9 to 10,000. So the fact that we're at 29,000 is more like being at 9,700. You know what I mean?
Right.
Towards 10. So, and if you remember, when we went up to 9,700, we didn't make it the first time. We actually had, I think we backed off a few times to get the energy to go up through 10,000, and I would say it's probably going to be the same getting up through 30,000. Yeah, exactly.
I kind of got my charts back up.
Yeah, so the VIXs definitely look like a buy today. The UVs, UVXY, TVIX, and the markets are coming. They're getting very close to going negative right now. This is a very bad development, because this is how the tops were made in 2007, 2000 and 2000, but particularly 2007, both in July and later in October. This is exactly how it happened. There was a very strong day that where the market not just went negative, but ended up going from being up. Remember, we were up about 200, 250 this morning. I think I saw 255 up, and then it started to slip away right after that. And now we're only up 80. Actually, let me correct that. We're still up 141 on the actual Dow itself. But what might happen today is, if we do go negative, maybe the Dow will be the last man standing. In other words, if the Dow is positive and everything else is negative, that's a very ominous sign that the top is in place. And look, let's call it an interim top, because the market has an incredible capacity to keep coming back, and I'm not really prepared to call this a major top just yet, but certainly it's a top in formation, given what we've seen here in the last half an hour or so. And going into the afternoon, if it sells off into the afternoon, we have sold off a few times in the last few afternoons, especially yesterday. That sell-off yesterday kind of bothered me. but it rebounded during the night. Maybe it was because they shot a few rockets into Baghdad or something like that that caused that late sell-off yesterday. But another feature is, you probably can't see this, but it kind of really sticks in my mind. When we went up to, what was the top oil price of all time? What was it, $140 a barrel?
That sounds about right, John.
Yeah.
Here,
yeah,
I can bring up,
remember.
I'll get a chart up.
Well, that went up and down about 10 times near the highs. As a matter of fact, it spent about 10 days going between 130 and 140. You know, it was kind of up, down every day. And then it sort of gave up, and you know where it went after that. It went from 140 down to 29. So, you know, that is a kind of a risk with this market, actually. In other words, you know, we are at a situation where everything is perfect at the moment with the economy, the way we've been going up. You know,
There you go.
I was going to. So it got, what's that price? 140.
147.27.
Right. So when it was making that top, there was a lot of volatility, and that's what's going on here with this market right now. We're getting a lot of volatility near the highs, so that's a bit of a warning sign.
The thing that caught my attention this morning, and I sent a message out to all of our traders. We were 10 minutes into the open. We had some pretty good volume on the S&P, but price hadn't budged, and that gets my attention. When you've got plenty of volume and price isn't moving, something's afoot. And turns out, yeah, we had no idea. Of course, this news was going to come out, and certainly that's played into it.
Right. Well, I think you and I both got a sense that this market is certainly vulnerable to a letdown here. And as I said yesterday, after the first 5 days, you tend to get a bit of a pullback. If the first 5 days are very strong, and so that's probably what's going on here as well. A bit of that. The gold has certainly cut its losses today. It was down a lot earlier. It's still over 1550. There's nothing wrong with that. The silver is close to 18, so really we haven't come down very much. The major gold stocks have pulled back, because remember, they've been leading this rally higher, and they have come back to a level that I think is very attractive to be looking for the next upturn to buy into. Because even though we had a kind of a sharp reversal on that, let down of the hostilities, if you like, the ability for gold to jump up another $50 overnight certainly can't be discounted. If it did that, you'd probably see a potential double top around 1608 or somewhere like that. It might come back a bit more, but if it didn't come back too much, it might mean that that 1608 high is going to be taken out, and we're going to go much, much higher. Under those circumstances, I think the gold stocks would be very attractive. So but right now the dusts are a little bit. Actually, it's probably worth putting up the J nug or nugget if you like, either one.
Here we go. There's a nugget. Put it on a daily. Okay.
Now, what I wanted to draw your attention to is that this preponderance of selling that emanated here. And nugget is basically, I mean, look, when you look at this chart, what would you say? We say, well, this nugget went up through that green pecked line, right? Without any kind of a test. It just went straight through it. So it kind of got ahead of itself. It's potentially come back to test itself, test that level of 30 breakout, right? Mm-hmm. I was actually telling that to a friend this morning about this 30, coming back to test the 30 breakout. What's fairly critical here is that if we actually close up today sort of get back to 32 perhaps, or something like that, this thing could very easily just power on upwards. If that happens, it's not ready to do that. It could even be a doji today and then up tomorrow, just like it seems to be forming there. But it's fairly critical that we don't really break down much more on this nugget. And given what's just occurred, I say there's a reasonable chance that the gold is going to firm up as a result of what's happened. So it's certainly holding quite well. We're actually up on the platinum. We might have another look at the platinum, Dwayne, because I think, remember I said if the platinum doesn't pull back too much, it might be. You look at that. I think that's the platinum is turning bullish there. Remember I said yesterday, if that down day doesn't follow through, it probably means we've pulled back a bit to get the energy to go up through 1,000 and potentially have a fairly strong move. I mean, look at that base. You've got a very long, year-long base there, where this thing is, if it starts getting north of 1,000, it's a huge thing, because 1,000 becomes support. And it's a whole new ball game. We're really shooting for 2,000, and I would compare platinum's formation here, where it's been stuck in this range for 3 or 4 years, below 1,000, as being very similar to gold being locked below 500 right up until 2004. When it made a bottom at 425, and then by the end of the year it was like 700. It had a very significant run up. So looking at the same thing, you could argue that, look at that 800 bottom here recently, running up to 1,000. So we ran up about $300 then. So about a $600 move for platinum up to about 1,600. Would that be right? 600 from 1,000. That would be, I guess that would be 1,600.
Right.
So it would be a pretty significant move for platinum, and it would have it catching up to gold, which would be incredibly bullish. I don't know whether you can do a platinum gold spread here to get, if you can do gold minus platinum, because I think that inflection point may be at hand as well, where platinum starts leading gold's price. As it catches up with gold, it could be narrowing the gold silver difference, the gold's platinum difference, and that actually in of itself could be very, very bullish for the metals.
Okay, this article just came out 7 minutes ago. Boeing shares are rising following reports that Iran may have mistakenly shot down a Ukrainian 737 jet Wednesday. The United States increasingly believes that Iran downed the plane soon after it took off from Tehran. CNN and other news outlets report the crash took place hours after the rocket attacks, blah, blah. Okay. Early reports suggested the plane went down because of a mechanical problem. But now, it's not. This is. What do you think comes of this?
I don't. Nothing necessarily immediate, but
you don't think?
It's probably going to grow into a bigger story as it gets out, and a lot of people are going to be pretty upset, I guess. Remember the shoot down.
I hope it turns into anything worse. Certainly, but
yeah. Well, that's the problem, and but on the other hand, it could be kind of a negotiating point where if they come out and apologize for it, and maybe they'll mend their ways. If they take heed of Trump's warnings. Out of an unfortunate tragedy could come a better world, but we're not there yet.
Yeah. All right. Spencer, yes, some
The other drama that came out of nowhere was this Meghan and Harry bombshell, sort of semi-quitting the royal family, which is kind of it's kind of interesting because there was a Twitter storm like I've never seen before, and there was some really hilarious comments. Unfortunately, some of them were profane, so you couldn't really retweet them. But there was some pretty funny things said in that yesterday and today. But it's I think it's
has this happened? Has this happened before?
Not really, not like this. And Piers Morgan is very critical of Meghan and Harry, and not so much Harry, but of Meghan, and saying she ditched her dad, she ditched her friends, and ditched me. He didn't actually say that, but it's implied. And now she's ditching the royal family, and it's sort of. I mean, one of the things that impressed me a lot as a Brit was the Queen. I thought when the Queen kind of invited Meghan on that train trip, and really sort of, had her sitting beside her, and it was very gracious and welcoming. I thought that was pretty touching, pretty impressive. But like with all families, like my father used to say, there ain't an out like folk. And he's dead right about that, because, all these families, there's all kinds of drama in every family. Especially the royal family, where I think what set him off was the picture of Charles, the Queen, and the two, the son and the grandson, all the future kings with everybody else excluded. And the other thing was the picture, of the Queen's speech last year. There was a picture of Harry and I think Andrew's daughters as well. And this time it was just the bare minimum. And so this isolation of everybody except the core of the family is probably upsetting everybody in the royal family, because Andrew's daughters, I mean, they consider themselves, they weren't too happy about Meghan coming in, period. They didn't like it from day one. But now they're out. They're kind of they're almost outcast. They're on the outside. So it's really only, and I don't think strategically it's not a very clever idea, because right now Harry is the second most popular royal after the Queen. And I wouldn't be surprised if by the end of this week he's going to be the most popular royal, because he's going to get the votes of all the people who are against the royal family on his side. So he may become the most popular royal, which is kind of like shooting themselves in the foot a bit, if that's the case. One of the rather interesting things about the royal family is it's not a cast of thousands yet, but it's it's a pretty big family, and there's a lot of parts to it that are interesting, for people who are into royalty. So I think it's a bad development, and hopefully they'll patch it up. The other thing is, they're accusing Harry and Meghan of sort of trying to be Kardashians, and all I would say is, the Kardashians aren't in the same league, because they've been obliterated in terms of the kind of reaction, the worldwide reaction that this has created. I mean, in a way, it's probably incredibly positive, because it's creating a kind of a melodrama, a real-time melodrama going on with a real family, right, that everybody is interested in. So in a way, it's kind of a pretty clever idea to kind of raise the stakes and raise the awareness of the royal family, because I mean everybody's glued to it. Everybody's like fixated by this whole thing, which is pretty interesting.
Yeah, the tabloids will have a field day with all of this. This will give them something to carry on about for quite some time.
So we've had a little bit of a rally so far. which is encouraging. Remember, this is an incredibly strong market. So, I mean, there's never been, honest to God, I don't think there's ever been a market like this before, Dwayne, where especially this recent runaway rally to the upside over the last couple of months. It's just, there's never been anything like it. It's just an amazing, it's absolutely amazing, this market.
Here's the daily chart. Now, if we get through this area that we're at right now, the next stop on this trip would be up at about 32.90.
Yeah, I mean, look, that test, that just happened is a really powerful thing. Look, in a way, it's, when you have a 25 or 30% move of like last year, at some point during the year, there's going to be a bit of a retest of last year's up move. Is it going to be a 10% pullback? Is it going to be a 20% pullback of last year's? I'm not talking about the whole market. I'm talking about, of last year's up move. The fact that this spike happened, in a way, tested the market for already right down to the big, to mid-December, and it came roaring back up. So that's actually a pretty positive thing. When you see these spikes, because the better the bottom, usually that's one. I mean, look, there's only one way to tackle this market, and you've got to buy pullbacks until proven otherwise. And every single pullback that you've bought has been a winning strategy. It's tough to do that. It was tough to do that the night when everything got hammered down. It was tough to go in and turn and buy that pullback. But if you did it, you did a fantastic job.
Sounds like I hear Dr. Tom there. Dr. Tom, welcome to the show.
Hey, thank you, sir. Good to be here. Hi, John.
Hi there.
Hey, John, there was a question for you from Frederick. I just started watching the Netflix series The Crown. Would like to hear your thoughts about the show. Have you watched that?
Well, I haven't actually watched it, but it's getting a lot of coverage, especially in the UK, because there's a lot of outlandish stuff in it. And now they're all saying that Meghan could play herself in The Crown and all this sort of thing. So it's
is it just a take on the royal family? Is that?
Yeah, exactly. All the characters, but as you know, most of the time when people try to play real life characters, it doesn't come across very well. So it's not something I was immediately attracted to looking at.
Gotcha.
Sometimes it's kind of painful to watch these kind of melodramas, because they don't do a very good job of. But this one's definitely captured the imagination of the Brits, and it's pretty popular from what I gather.
What are your thoughts on it so far, Friedrich? And Tom, Dr. Tom, have you watched it? You familiar with it?
I have not.
Okay.
I've been watching the real life dramas.
Yeah.
They're exciting enough for me.
Well, we've sure got a lot of it. Frederick says he's really enjoying it. He says it's good.
Yeah, no, it's probably worth checking it out, because I think there's a new season starting or something, and if that's the case, obviously it's a success and people love it. So, and a lot of people are Suits fans because of Meghan's part in that, and these other things.
Did you watch that show? I enjoyed that show the first couple seasons, but I lost interest in it after a while.
Yeah, listen, it's the same with a lot of these things. They get a bit old after a while, and there's so many things taking up our time these days. It's hard to find the time to watch stuff. Well, listen, that's all I would say is if we turn down again today, go negative, obviously, there's a higher chance of a reversal today. But as it is right now, we're
looking at the last 10 years, John, on the screen right here. This is the last 10 years.
Yeah, I mean, look, everything about that chart, as we've been talking about for a while, has it going kind of parabolic. And this massive amount of liquidity that the Fed has put into the system, is, you know, they've done it now. They really can't undo it. You know what I mean? It's sort of like baked in the cake.
Right.
And the implications of that, you know, Winston Churchill used to say, we shape our houses and they shape us. In other words, whatever you do eventually is going to have consequences. Consequences of these Fed, unprecedented Fed actions and the unprecedented stimulus by 19 countries, you know, central banks around the world. Never seen anything like this before. Odds are very high that we could actually have a surprisingly strong up year. Not unlike what happened in '99, except a year later in terms of being 20. And it could be a kind of a crescendo. I mean, this could be your problem in 21. You know, if we overshoot this year, if we sort of have a 50% up move in the market, or even a double, or something just totally off the charts, which could happen. You know, obviously, when we go down the other side of it, we're already going parabolic, and when you go parabolic, when it ends, it always ends badly. You saw that with Beyond Meats. You saw it with Tilray. You know, Tilray is a totally crazy situation. That stock went from $25 to $300 in a very short period of time, and who would have thought when this? We did say to short it at 280. You know, we missed the top at 300, but it was a pretty good call. Yeah. And I told people to don't be tempted back into this thing until possibly in the last couple of days. So we couldn't have called it better.
All right. Well, thanks, John.
So just one sec. So what I was going to say is that if we did overshoot this year, it sort of sets 21 up for the curse of 21. So that's something to keep in mind.
Okay.
Okay.
Thanks so much.
And by the way, the bonds are rallying today as well, which that's a bad sign in of itself. The fact that the bonds are rallying now against, and I was going to just for Tom's benefit, the ultimate beneficiary of everything that's gone into the economy since 2009 is going to find its way into the gold market, which is why it's not unreasonable to believe that we will have a blow off of tremendous proportions in the gold market in the next few years. That to me is almost inevitable now, with all this stimulus going into the market. In other words, the immediate beneficiary of this stimulus is the market, but the ultimate beneficiary of this stimulus is going to be the metals.
Good to know.
Would you agree with that, Tom?
I do, but I always like to hear from somebody else.
Okay. All right. Well, I'm endorsing what you already feel. So I totally on the same. Yeah.
Thanks a lot, John.
It's always good to have your opinions validated.
Yeah, that break in the bonds today actually is a big deal. You know, when you look at that chart. So, which is the equivalent of the bond. That's the yield. The bonds are going up equally.
Yeah, I'm gonna bring up an actual bond chart.
And these bonds rallying, that's another nail in the coffin on this market. And we've got a developing doji on the gold now too.
Outstanding.
All right, here's bonds.
Yeah, look at that. That's significant. Yeah, that's a big deal.
Yep.
And just actually, Dwayne, if you can go to that, if you can squeeze that chart up, I've got a few comments on it. If you don't mind, Tom, I just want to say a couple of things here.
This is a 30-minute chart.
I'd like to ask you a question too before you go.
Okay. Look, I think these bonds have made a kind of a three-wave correction from the recent highs, or possibly a multi-wave correction. Okay. And they are potentially poised for a trip up to and you know, look, they've got this spike deal, the same sort of spike deal there. Obviously, if these things get above 160, that would be very significant. And if they start heading back up to those highs, previous highs, it obviously means the economy is not doing so well. So, and it's not unusual. Look, the economy should do well in 9 months' time, but in the meantime, the economy could go a bit soft here in the next few months, because, you know, remember, where was the market back in July, June, July, August was kind of soft. If you remember, it was weak. And so, you know, go 9 months forward and you start getting into the second quarter. So that's one of the reasons why I'm expecting a second quarter pullback in the markets. And then I would expect the economy to maybe strengthen up in the summer going into the election. So there's a kind of a picture of what could happen with the economy and the markets later this year.
Okay.
Okay.
All right. Oh, and John, you said you had a question for John?
Yeah, or for both of you, actually, just opinions. I'm looking at the gold chart, you know, just a basic line chart, and we're up like 100 points in the last few days. Is that like a fair reaction to the, you know, a flight to safety kind of thing with the possibility of conflict? Or, well, Nancy Pelosi says it's going to be World War III, but...
Well, it's a good question, Tom, because what I was saying earlier on before you came on is, in spite of that pullback, you know, from the reaching to a new high, what's actually been going on is, you see, like what we were saying a few weeks ago, is when the market starts taking out that 1520 and look at the rate of acceleration from 1480 up to 1600, you know, it's a $120 move. It's been pretty fast. And this is, you know, if this becomes a waypoint, right? In other words, if this just got a little bit overdone and it holds in around the 1550, which has come back to test the previous highs, then the 1550 is support. The next up leg could take us way up to 1900. You know, if the gold blows through this recent pullback and ignores it effectively, right, then you're going to see a very, very dramatic up move in the gold. Very dramatic. I mean, it's going to be, you just sort of got, I think you've got to watch this as a potential entry point here. And if you get on board and it starts really accelerating higher, you know, you might see a gold move of $100 in a day. You might even see $150 move in one day, possibly. So, and you know, remember, it's not, you know, gold isn't up here just because of Iran. It's up here partially because of Iran, okay? But it's also accelerating because of the financial things that are going on in the world. You know, it's the worry of the Chinese banks failing, Deutsche Bank, its problems, European banks, you know, even the US banks. You know, if the economy slows, the US puts more pressure on the US banks. So gold, you know, the money that's been pouring into the market, it's going to end up, it's going to find its way into gold. You know, sooner or later, it's going to go into the gold. And look, why did gold go from $100 to $875 from 1976 to 1980? It went there because the Fed were panicked. You know, they were facing a depression in 1974. They went in and put tons of money in the market. Nobody knew about it back then because the Fed didn't telegraph the way they do today. But they, you know, explain to me how the stock market doubled in a year. The stock market doubled from 1974 to 75 because the Fed went in and rescued the market. Now, because it was trapped by the 1,000 level. It took a few more years before it finally broke through. But guess what happened 4 or 5 years later? Gold went from 100 to 800. It went up eightfold. we're basically looking at the same movie, you know, so many years on. It's really, in my view, we're replaying that movie from 2016 through 2023. It's not a 4-year movie, it's a 7-year movie, because we are, you know, part of the movie, I think, is going to be when the dollar breaks down, probably in 21, 22, 23, and completes its 7-year down cycle. And previous dollar cycles, it's been cut in half. So if we go from sort of like recently being up around 100 to being cut down to 50, not impossible to happen with the dollar. You're going, if the dollar gets cut now from 100 to 50, you're definitely going to see $4,000 or $5,000 gold. We may see $8,000 gold. So, and you remember, the currency is being debased all the time. Things are getting more expensive. The gold's value keeps going up over the years, and there may be other issues in the world by then, including oil supplies. You know, if we have a repeat of the 1970s, where by 1980 there was a second gold spike, mainly caused by Iran, same thing could happen here. What happens if oil goes up to $200 a barrel temporarily? You know, that's going to push gold prices up by thousands of dollars. So we call
the movie Gold the sequel.
Well, it is, and there's an even more interesting sequel. Look, you know, we are, as I've said many times, we're retracing the same basic things that happened 100 years ago. In other words, going into 1920, the markets were getting revved up. They kind of overshot. Going into 21, they got cut in half. The Fed came in and rescued the markets and basically created a scenario for the roaring 20s to unfold in a way that nobody could even foresee at the time, and ended up with a massive rally in markets right into 1930s, 1929. So, you know, in fact, what we've just been saying about this market going parabolic, maybe we've got one more pullback into 21 before we do go parabolic into, you know, and we go to a 50 or 60,000 Dow, you know, in the next decade. But the other thing that nobody knows, I mean, this is breaking news, because I mean, nobody has figured this out. Just one second, I have to take this. I got to come back to you in a minute because I got to finish this.
All right, John. So, Dr. Tom, I agree with all that. What was it that you wanted to cover today?
Well, I wrote an article this week on conservativetruth.org. It was called "If Trump Bombs Satan, the Democrats Would Whimper, Whine, and Wail."
Yeah, sorry about that. Yeah, just to
conservativetruth.org.
Yeah, just to continue the theme. So, what was the feature of all of the second decade of the 20th century? There was no inflation. Okay, there was no inflation, and the coming into the 20s, guess what? Inflation started showing up in all of the economies, and the Fed has thrown inflation to the wind now. They're going all out to create inflation in a way never before. That's part of all this stuff that's going on. So, but where did the inflation show up? Markedly, right in the heart of Europe, right in Germany, in Bavaria. And guess what the inflation did? It went from like 1% to 10%. To 100%, to 1,000%, to 1,000,000% in about 4 years, right? Mm-hmm. I believe that all this debt in the world is, vulnerable to the same kind of. It's not going to be one state down in Bavaria or in Germany. It spreads into Germany, and Germany is really the only kind of like, is a canary in the coal mine kind of thing. It's going to be a Western world inflation, or Europe, the US, China, Asia, everywhere. Inflation is quite likely, in the same way as inflation rose at the end of 1980, in 1979, 13, 14%. I mean, the 13 to 14% inflation was enough to send gold up eightfold. Think about that, right? So, it doesn't have, the inflation doesn't have to be that crazy. If we have 10 or 20% inflation here in a few years' time, you're probably going to see gold go up really, really dramatically. If it's a total wipeout, if it's a hyperinflation, which some countries may be at risk for, ultimately it's going to wipe out all this debt, and there's going to be a reset. And perhaps that reset comes in 23 or 24, and that's what creates the roaring 20s of the 21st century. But I think that is, look, it's a logical, after these very, very big, remember, we had a huge uptrend from 1932 through 1970, through the mid 70s. We had this huge uptrend that was briefly interrupted by this inflationary period where the markets went sideways for a while. But then there was a reset in 1982, and basically we've been on a similar uptrend since 1982 now. Some people are measuring, from 82 onwards, and we're getting to the end of a financial boom that inevitably translates to a precious metals boom. And it's. Don't you think that the
United States itself is subject to a possible hyperinflation?
Well, it might be, because they got it under control in 1980 because of Volcker, but he didn't tame it overnight. It took a while to get it under control. And secondly, it might be a lot harder this time for a lot of other reasons. The whole debt situation is so much bigger. And there's a risk, we've already, you can see this movie already unfolding, because it's not, don't have to hear from me. The projections of debt in 4 years' time in 2023 is 30 trillion. And the economy is only going to be at 24 trillion if we're lucky. So you're going to have a 6 trillion deficit. And right now it's only 1.5 trillion. So this deficit of the economy versus debt is going to blow out in a way that's going to shock the world. And the consequences of that, I mean, listen, just as would anybody complain if gold is $3,000 by 2023? I'd be shocked if it's not at $3,000 the way this thing is going. It's probably going to be a lot higher. So you really have to start paying attention to this, because, in the same way as Jeffrey Gunlack pointed out, different countries have had this super trend. You had Japan from 1950 to 1989, where it was like became the dominant power. All the richest banks were Japanese banks, and they were starting to buy up Wall Street and the center of New York, through Rockefeller Center and all these places. They were buying up all the buildings. Then they crashed, right? And then remember, the U.S. sort of came, that's when the U.S. started its ascent. And the 90s were a tremendous period for the U.S. because they were carrying the world as we were going, up in the 80s and 90s. Germany was absent because it was trying to assimilate East and West Germany, very costly for them, and they didn't start really emerging until this new, till the millennium, the new millennium. And for a while Germany was very strong in the early, in the first decade. China was super strong in the first decade. It's continued to be super strong, but it is fading in a lot of ways. But the big question is this, maybe is it going to be it's probably going to be the end of the next decade before the U.S. succumbs to something, really bad. But there could be an interruption in the next few years where, inflation becomes a huge problem. I mean, you probably don't remember this, but there was a time back in the, I think it was in the 80s, where America was being scolded by Europe because its economic condition was so diabolical, and that was in the early Reagan years. Well, that didn't last for long, obviously, because America, emerged to be the biggest winner in the world. But
much more recently, China itself, a front page article from their finance minister, I think it was like 2 or 3 years ago, was berating the United States for its willful spending and its huge national debt. And the article had the debt breaking through the safety net of the U.S. economy.
Yeah.
And here's a communist country who's got they've got a stake in the game because they have so much of our debt, but they were berating us publicly, trying to humiliate us.
Who is this?
This is the finance minister of China.
Yeah, right. Yeah. Listen, the elephant in the room that nobody's paying attention to right now are the central banks themselves. They're buying, the last year they bought more gold than ever, or in the last couple of years. Listen, anybody who underestimates, you know what I said in November 98 when, things were really bad in Russia. In November 98, you remember, I never forget it, they were banging on the bank doors because there were lines outside the banks. There was a run on the banks, and it was really the bottom of the market in 98. And I came out in print, and I said, if you can't put all of your money in Russia, put at least 10% of your portfolio in Russia. That's what I wrote in November 98. And, the next couple of years, things started to pick up in Russia. There was more commerce starting. You could see that streets were being, there was becoming really beautiful what they were doing. And then, I'll never forget it, in just about as the new millennium started, you see this rocket taking off parts for the space station. And it just looked to me like, anybody who underestimates the Russians are really dumb, because they're the greatest chess players in the world. They're very, very smart. They're incredibly, adept at a lot of things. I mean, whether you like it or not, they were, they won the space race in the early game. They've been a very major player in space, and then now they're in hypersonics and everything. And I would say Putin is very well advised in the financial arena. He's got probably some of the smartest people ever lived in financial expertise advising him. And what are they telling him to do? They're telling him to buy 40 tons of gold every month. And it's starting to look like a brilliant strategy on Russia's part, because if our belief, and they're one of the big elephants in the room. China's the other big elephant in the room. I mean, China is selling its U.S. bonds and they're buying gold. If you don't understand that, I mean, you're really not getting the memo. And
not only is China buying gold, they've taken over the place of the biggest net producer of gold away from South Africa.
Yeah.
They've taken the place of India as being the biggest net purchaser of gold. But they're also doing something sneaky. A lot of the gold that they mine is not being reported, and they're also going back to their older mines and with new technology going through the tailings and producing more and more gold, which again is not reported. So they could have an awful lot more gold than we think.
Arguably, they could have 20,000 tons of gold as well. It's supposed to be only 2,000, but I think, when they released those figures a while back, they did it around the time gold bottomed, and they didn't want to say that they bought too much because actually they were losing at the time. and they didn't want to sort of, they wanted to save face, so they were very cautious, and they just said, oh, we've only bought a couple of thousand tons. So Russia and China officially only own the same amount of gold. They could come out. Imagine if they came out tomorrow morning and said, we've increased our gold holdings to 5,000 tons. I mean, I'm telling you, gold is going to go up $500 right away, right away.
Well, China's been very smart about gold. The biggest gold coin show in the world for decades has been the one in Orlando. It's called the Fun Show, the Florida United Numismatist. And people came from all over the world to go to that show. Guess what the biggest gold show is today and for the last 3 or 4 years? It's in Beijing.
Yeah.
And they have 25, 30,000 people come out for that show. But the other smart thing China did, I mean, after FDR took us off the gold standard, for 42 years, it was illegal for Americans to own gold bullion. China, on the other hand, has encouraged its citizens to buy gold, plus the government itself, the central bank, has been buying gold. So whatever the government holds, you can make a rough estimate that the amount of gold in the country, which is owned by citizens but really controlled by the government, is double whatever they say.
Yeah.
And so Chinese citizens have been buying gold like crazy.
Yeah. No, I totally agree with you. And there's 1.4 billion of them, and there's almost an equal amount of Indians. And gold is so, and there's 3 billion people in Asia who are just besotted with gold. So it's listen, Doug Casey a long time ago said, the gold, when it all starts, it's going to be going like a fire hose or a garden hose, like to a fire hose to the dam, the Hoover Dam breaking. And what I expect to see, in fact, this little correction we just had from the 1600 down to where we are today, if you don't believe that can be taken out in a nanosecond, go back and look at what happened in 1999. We had a lot of stocks like Yahoo that would gap up, $10, $20 overnight, and then they'd come down, and sometimes they'd close on their lows, and you come in the following day and they're up $5 or $10 more again and screaming higher. That's probably what's going to start happening with gold fairly soon. And I do believe there's going to be an upside acceleration in gold that's going to be breathtaking once we get up sort of towards the 1700 level. And remember, what's the name of that? Tudor Jones, not so long ago, said,
Tudor?
he said 1700. I wouldn't bet against him. Gunlack said 2400. I think he's right on the money. But this thing ain't going to stop. I think when it starts getting into the 2000s, that's why I said 3,000 to 3,400 is something you just cannot rule out. And you know what? By middle of 2021, we really could be hitting 4,000 by June of 21, and that guy's going to make a ton of money on those options. So this is a really big deal, and I think it is the giant has awoken, and it is starting to flex its muscles, and you're going to see some spectacular upside in the metals in a fairly reasonably short period of time. I really believe that now. And we did say a while back, long before all this recent drama happened, in just the same way as Iran had a lot to do with gold going to 875 back in 1980, they're going to be a player in this run-up in gold as well. And that part of it has probably already started. I mean, look, do you really think they're going to give up their nuclear ambitions? They're just like Kim Jong-un. It's gonna, one of these days, it's gonna come to a crunch, and those facilities are going to be taken out one way or the other if they're there, and when they're unearthed, or if they start throwing stuff around. That's probably maybe a year or two down the road. Maybe it's the curse of 21, but it's kind of on the horizon, and you don't want to forget it.
Well, when Obama was still in office, Netanyahu wanted to go in and take out Iran's nuclear facilities, but he had to have the bunker buster bombs because everything's so buried so deeply in heavily reinforced bunkers that, Israel doesn't have them. And Obama told him, no, can't do it. And if you go in and try to take them out yourself, we won't support you. So I think it's going to be entirely different under Trump. He'll be just as decisive there as he was with this General Soleiman.
We were talking, Tom, we were talking about that a couple of days ago, and I got to tell you, I mean, listen, this thing, it was down to the seconds. It just had to be, a second or a minute or two, and this would never have happened. But you look at the video of how it happened. I mean, jeepers, the firepower they unloaded on this was just nothing short of phenomenal, and the timing and precision and the execution of it was just incredibly impeccable. It was impeccable. I think that's a real wake-up call to anybody who's walking around with terrorist ambitions these days.
And the smart thing that Trump did here, you remember the whole scenario when they were going after bin Laden, and they showed Biden and Obama sitting there in the Situation Room, tensely waiting, following every move, commanding the situation, and being heroic. And then finally he says go, gives the go signal. Trying to micromanage troops in the field from the White House. I just read a very interesting article before we came on air in Politico. It said that Trump had given the military authority some time ago. They wouldn't say exactly how long. It could have been a week, it could have been a month. But he gave the military authority. Whenever you see an opening, go for it. He didn't tell them, okay, they didn't call him and say, well, I think we can get him. Is it okay to kill the sucker? No, they already had the authority, and they did it.
This is the difference with Trump and everybody else. What I like about what Trump is doing is, he trusts his military guys, and I think, look, it's taken him a while to find the right people to have around him. I think Esper is just perfect for him. They get on well together. The guy has shown exemplary performance so far, and the generals have gotten what they've always wanted: a president who's not interfering and trying to micromanage a war. This is why do we have this problem today? We have it because George Bush the first basically made the biggest military blunder of the 20th century by not going in and taking out Saddam the first time. And look at the consequences of that. Same thing with bin Laden. Didn't do it, Then Bush, we find out that Bush had the chance to take this guy out in 2006. He didn't do it. I mean, how many, Jesus, I'd be, if I was sitting in a hospital bed maimed hearing this today, I'd be livid, because, you lose your legs, if you got no arms and legs, it's a pretty miserable life. So it's just terrible. And all the poor people who died. I mean, listen, because of George Bush the first blunder, 4,000 people are dead and 30,000 are wounded because of the Iraq War. There wouldn't have been a second Iraq War if that had been done right from day one. That was the time when they went in the first time. They would have been greeted with flowers, because everybody was living under the gun, and the whole world could have been different. But anyhow,
I have a good friend who was the general that started Delta Force, Army general. Eventually, he commanded all U.S. Special Forces. And then when he retired from the military, he became the Assistant Undersecretary of Defense for Intelligence. And I ran what I'm about to say to you by him. And I could tell he agreed totally. He just, being a military guy, he couldn't say it. But I don't believe the president should be the commander-in-chief.
Yeah. Yeah.
The only reason the president is the commander-in-chief is because Washington was first the commander-in-chief before he was president, and he was elected as a military man, and he retained that title, and it's just become traditional, and president has been called commander-in-chief. But there should actually be a military person who is the commander-in-chief, who has the day-to-day authority.
Well, I think the Joint Chiefs of Staff, the Joint Chief of Staff has that role. But look, the thing is that,
but not really, because the president still has to give them permission to do certain things.
Yeah.
I think that the civilian government should oversee the military, and they should set policy, but then let the military do the job.
Yeah. Okay. Listen, I kind of like the way it is. I think the president being the commander-in-chief shouldn't be changed, but the handing over the military operations and getting advised on it seems to be working very well, because look, they were lucky with bin Laden. If it wasn't for Rob O'Neill, the story might have been different. And the hats off to him. And but remember, it wasn't a flawless operation. I mean, listen, they nearly got kind of caught, because one of the choppers went down. So they were very, very lucky to pull that off and get back without anybody being killed. What really struck me with the Big Daddy guy, with Baghdadi, is Trump sent in 8 choppers, not 2, and he had overwhelming force. I thought that was incredibly impressive, and really the same way this thing was pulled off last week was equally, very incredibly well executed. I mean, just
very impressive.
Couldn't have gone any better. So, I mean, if that doesn't inspire people and give people a sense of confidence, then I don't know what will.
I agree with you. Right now, I like the idea of Trump being the commander-in-chief, because he does what he should do, and that is he leaves the data. I'm sorry?
No, that was background noise. Go ahead.
Okay. He leaves the day-to-day operations and the actual minute-by-minute decision-making to the military. But when you have someone like Obama for 8 years, who's a commander-in-chief, who's a coward, and who only did things to make himself look good, I'm not crazy about the president being commander-in-chief. Mm-hmm. So it's like when you write bylaws.
That was the problem with Bush 1. They had the Iraqis on the run, and he wanted this 100-hour ground war because it looked good, or it was a good talking point. I mean, do you think anybody cares about that today? I mean, when it cost us 4,000, all these deaths and all this horrendous deaths. I actually believe. Listen, if it goes even further, you could argue that if they had gone into Baghdad and taken him out, this whole bin Laden saga might never have happened. And, there might be 2 towers still standing in New York today. I mean, it's really terrible what happened, because...
And ISIS would never have happened.
Yeah,
but
exactly.
That's my point. If instead of George Bush being the commander-in-chief, if the military had been in charge, once the operation started, they would have continued on. Why should a politician...
They did a fantastic job, the military.
Yeah, they could have just pushed on, and in another week's time, completely taken over Baghdad, taken out Saddam Hussein. But because of a political calculation, he stopped them. Yeah. And a military man would not have done that.
Yeah. Very sad, but that's the world we live in. So, listen, Tom, thanks very much for the chat, and for allowing me to come in on your time. Thanks very much, and we'll catch you next week. Thanks very much.
All right, John.
I always enjoyed chatting with you, John.
Okay, all the best. Bye-bye.
Okay, Dr. Tom, well, we got a couple minutes left. Was there anything else you want to cover? You were starting to talk about that article that you had put up on conservativetruth.org.
Yes.
I've got it up on the screen.
Yeah, I really believe that if Trump had bombed Satan himself, that the Democrats would berate him for it.
Absolutely.
There was one Democrat pundit that even went so far as to say, well, it was the right decision, but it was the wrong commander in chief. You know, even when they agreed with what he did, they couldn't give him credit. They had to say, well, he shouldn't have been the guy doing it. But there's a phrase in Latin, sic semper erat, et sic semper erit. And what it means, it's a phrase that's been used for thousands of years. It translates as, thus it has always been, and thus it shall ever be. And it's usually shortened to, 'twas ever thus, or it was ever thus. It means basically, stuff just keeps on going on, the same old, same old, same old, and it's not going to change. But what I was talking about in the article was the fact that our two-party system, which is not constitutional, I asked that question in an article once, is the two-party system constitutional? No, it's not, because it's not mandated by the Constitution, but neither is it unconstitutional. Okay, so since the Constitution is silent on it, we've been stuck with this crazy system where we have two monopolies that agree on one thing, which is they're not going to let anybody else have control. So in most states, you can't even register to vote in the primaries unless you're Democrat or Republican, which is crazy. Why shouldn't the Libertarians or the Green Party or whatever wackos want to register? Why should they not be able to register? So we have a situation here where if the Democrats say the moon is green, Republicans are going to insist it's orange.
Right.
If the Republicans say this group is terrorist, Democrats are going to call them freedom fighters. It was ever thus. It's always been like it. But since Trump has been elected, it's gotten far, far worse. And basically, it's wrong, it's stupid, it's dangerous. It imperils our nation when we can't agree on the most basic principles of right and wrong. And the problem is that most of us just accept it. We say, well, that's just the way things are. The two sides have to distinguish themselves from each other. You know, even if they believe in something, if the other party says they believe in it, then they have to say, we don't believe in it. If the Republicans want to do something that the Democrats really want to have done, but then they make it public that they're going to do it, then the Democrats feel duty-bound to fight against it. It's insane. The Democrat Party has ramped up the rhetoric since Trump has been elected to its highest level, which I call unreasoning hysteria. And we somehow have to unite as a country around certain basic principles that, you know, national security, real national security, not the political concoctions that they call national security calculations. That has to be paramount. But it can't happen when something like this happens. We can take out this General Soleimani. I was on another radio program today, and the host called him General Salami, you know. But taking out General Soleimani is something that everybody should agree on. He's not just the Middle East leading terrorist like the news media call him. He was the world's leading terrorist. There should have been no question whatsoever. But they take him out, and instead of congratulating the president, they start writing eulogies for Soleimani, talking about how he had a hard life as a young man. Wikipedia says he worked hard as a young man to pay off his father's debts. When he wasn't working, He worked out at the gym or listened to sermons. Just your average, everyday, wonderful guy.
Yeah, right.
They talked about his military career, I put that in quotes, as the principal military strategist and tactician in Iran's efforts to combat Western influence in the Middle East. But nowhere in Wikipedia do they use his real title, which is terrorist.
Right.
Okay?
That's exactly what it was.
By the way, folks, if you're looking for research, don't use Wikipedia, please. It's not an encyclopedia, as the name suggests. It is decidedly liberal, and just the fact that they made him out to be this nice guy that the U.S. assassinated. When Obama went after Osama, his blood brother, they didn't call it assassination. It was a well-warranted military action, and they called Obama a hero. And here Trump takes out somebody, because if you remember, by the time Obama went after Osama, finally, Osama had lost most of his influence. Other terrorists were taking over, and he was basically just hiding out in Pakistan. Soleimani was actively planning attacks on U.S. interests when he was bombed. But they call it an assassination of a foreign leader. Baghdadi, John mentioned Baghdadi. A lot of people don't know his name because he was extremely strong, but only for a short period of time because Trump killed him. Okay, but Baghdadi was one of the most brutal terrorists ever. But when he was killed, the Washington Post, the Democrats' PR arm, ran an obituary where they called him an austere religious scholar who loved to play soccer as a child.
I don't even have words for that. I really don't.
I was just about to say, sometimes I'm at a loss for words. I just, smoke's coming out of my ears right now, and it's just hard to say what I'd like to say without cursing, and I don't curse. So I'll just have to say it's insanity. The Democrats have got to become Americans. Your typical everyday Democrat, your man on the street, I believe is patriotic, has conservative values, doesn't believe in homosexual marriage, doesn't believe in abortion. It's their leaders who do all the damage. But the problem is that the rank and file of both parties, really frankly, don't look critically at what their leaders are doing. They don't look critically at their platforms and say, what is it really that I'm supporting? And I really believe that if the Democrat rank and file started studying their platform, 90% of them would quit the party because it has become so evil and so controlled by socialist influence. So here's my rant for the day.
Well said. Well said.
So anyway, interesting conversation with John there, I thought.
Yeah. Enjoyed listening to both of you guys. Well, I'll talk to you sometime between now and then, but we look forward to having you back with us again next Thursday.
Okay, great. Thanks a lot for that.
My wife's got this flu bug that's making the rounds, and so it's been hanging in there longer than it should, so I'm going to take her to the doctor to make sure it's anything more serious than...
All right.
So, my friend,
pray for her.
Care. Thank you. I appreciate that very much.
Okay. God bless.
Okay. Talk to you soon.
Bye-bye.
Okay, guys. It's going to wrap it for today. See where the S&P is. Let's go to 30-minute. Yeah, it's this. Okay. Now, remember, we had... I still have that up there. Okay. This is Concierge, 7:15 a.m. Eastern this morning. And shortly after that, this was a Logic 247 short. This is the Concierge short. And you see what price has done? It's trying to make up its mind. Are there enough buyers in the order flow to take us to the next important price, important area overhead? Or are sellers going to take the ball down the field? Everything between the lines is the market trying to make up its mind. All right, let me grab my notes. Good word for the day. And we'll wrap this up. Stand by. I'm definitely going to reboot this machine when this show is complete and when I come back. Now, Psalm 23:1. The Lord is my shepherd. I lack nothing. That's the NIV translation. King James, most of us probably grew up with that. The Lord is my shepherd, I shall not want. Why does the Bible compare us to sheep? Because they're one of the most dependent creatures in the world. They must trust the shepherd for everything they need. And that's how God wants you to live, in complete dependence on Him. When you constantly live in the fear of lack, you're not trusting God enough. This core fear drives many of our other fears, including the fear of becoming disabled, the fear of growing old, the fear of investing, the fear of trading, the fear of retiring poor. In its extreme form, the fear of lack can lead to anxiety. It's also one of the root causes of greed. You can become so obsessed with insuring yourself against the possibility of not having enough that you hoard more than you'll ever need. It can drive you to become a workaholic so that neither you nor your children will ever experience discomfort, inconvenience, and helplessness. And like all fears, it's based on an erroneous belief about God, in particular, His ability and His willingness to take care of you. The Lord is my shepherd. I shall not lack. I want to encourage you to stop living as though you don't believe God's promise. A good strategy is to learn the promises, understand the ones that are conditional, meet the conditions, and then rest in His love and faithfulness. This doesn't mean you sit idly by and wait for God to do what He has given you the ability to do. You must do the natural things and then trust Him for the supernatural. That's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.